Welcome to this week's Rational Thinking. My name is George, and this week we'll be looking at the no-deal fears being lifted in the UK and the fresh package of stimulus coming out from the Eurozone. Last week saw a very strong week overall for the pound. Initially on Monday, we saw the pound soar after economic output in July increased by 0.3% from where it was in June. This is the biggest rise that we've seen this year since January and has beat all forecasted expectations. It was particularly surprising given how Brexit no-deal fears have recently kept economic output depressed as the uncertainty had weighed on the performance of the overall UK economy. Support for the pound also stemmed from a ruling by the Scottish court that the government acted unlawfully when they prorogued Parliament on Monday. This was a surprising outcome, as the initial decision last week actually ruled in favour of the Prime Minister. And an appeal will begin this week on Tuesday, where we'll see the Supreme Court give a final ruling. If the government are found to have unlawfully prorogued Parliament, then we actually could see Parliament reconvene as early as next week. The pound then hit its highest level as the week continued against the dollar, after hopes of a no-deal again increased, with the reports coming out that the DUP, which has obviously been a bit of a sticking point in these negotiations, were actually prepared to look at some compromise and abide by some European rules after a Brexit had been enforced. Overall, the pound has now appreciated by more than 4% over the course of the week, with the main factor being the carry-on from Parliament passing legislation that they would force the government to seek an Article 50 extension and also to avoid a no-deal Brexit by the end of October. And this is, when we think about where we were at the start of the month, this is a significant reversal of fortunes when at the beginning of the month that talk of no-deal had intensified. The euro gained against the basket of currencies last week in the immediate aftermath of the ECB meeting that took place on Thursday. The main takeaway from this meeting was that the ECB had launched a significant new stimulus package, and they also cut its deposit rate to a record low of minus 0.5%. But the main takeaway, as I mentioned, was the fact that the bond purchases of 20 billion euros a month will be restarted from November onwards, whilst the main interest rate remained unchanged at 0. The move comes as the ECB is trying to actually combat the slow economic growth that we've seen hamper the Eurozone over the last year, and said that the asset purchasing programme would run for as long as necessary while the interest rates remain at their present or actually even possibly some lower levels. ECB chief Mario Draghi actually told reporters that the inflation outlook, which is the key, with the target rate being 2%, had actually been further downgraded and expects inflation to decline before possibly rising towards the end of the year. However, what Mr. Draghi also did announce, and hasn't had the effect at this point in time, is that the ECB had lowered its growth forecasts for the Eurozone. It now expects a modest growth of 1.1% this year, and then a further 1.2% in 2020. This week we'll see another busy one in the currency markets. In sterling, on Thursday we have the release of the Bank of England minutes and the interest rate decision, which is expected to remain at 0.75%. In the Eurozone on Tuesday, we had the ZEW economic sentiment survey coming out of Germany, actually expected to increase to minus 38 from a previous of minus 44.1. And then in the US, we have another central bank meeting with the FOMC monetary policy statement and also the Federal Reserve interest rate decision, which is expected to see a 25 basis point cut, so going down from 2.25% down to 2% overall. Thank you for tuning in to this week's Rational Thinking. As ever, if you have any currency requirements that you would wish to discuss, please feel free to get in touch with the team at any point in time. Have a great week.